90% of traders lose money in this market. Now, don't be part of that 90%. Move over, make yourself part of the 10% of successful winning traders. I've got some simple rules. Stick with me through this video. I'm going to give you about 7 or 8 rules that you can apply each and every day to improve your trading skills. Rule number 1, stop loss. Now, we all think we're going to be correct when we enter a trade, when we plan a trade, when we devise a strategy, and we enter that trade thinking that we're getting great entry and it's going to go up from there and we're going to make a lot of money. But let's say we're wrong. It happens. I'm wrong. You're wrong. He's wrong. She's wrong. Use a stop loss. Limit your downside. Rule number 2, money management or position sizing. I want to use the same amount of money for each trade. So let's just say I'm trading a $5,000 account and I'm using my 10% rule, meaning I'm going to spend 10% on a single trade, which in this case would be $500. So I'm going to buy a call. It costs me $200. I'm down 10% on it. I know in advance, since my option goes out 3 weeks, I'm going to average down if I start off down. So I buy it for 200, goes down 10%. I buy another contract for 180. Now I'm in for 380. It goes down more to $140. I buy a third contract for $140. Now I'm in for 3 contracts, my full 500%. I'm aware of my money management. I have the time I need to be correct. Now, an example of what not to do. Let's say I make a successful trade. I make 30%. I make another trade for $200. I make 30%. So I'm making $60, $60. I make 10 straight trades and I make 30%. I had a great week. I was making $60, $60, $60, $60. I get overconfident. We're heading into Friday. I'm like, oh, the market is going to recover like I thought it was going to do yesterday. Now, it took to late trading in the day for it to recover and get to where I thought it should be. But again, if my sizing is off, and I'll give you an example, yesterday, my trades were about $500 a trade until I got into some SPY calls. I started out down over 50%. My trading size for that options play went to $2,170. Now, I didn't put myself in jeopardy of blowing up my account, but I over levered myself on one trade. Now, I ended up being correct, and as soon as I went green, I sold. I didn't even get to take all the profit that I should have. But an example of what not to do, if I was in the correct sizing, and I was in for 1 contract, 2 contracts, 3 contracts, even if I was down 40, 50%, I would have been much more secure to hold those 3 contracts until they were up 50%. And I still wouldn't have called the top on that one. So again, sizing matters. Money management matters. Okay, rule number 3, again, falling victim. Don't be overconfident, or as I call it, a false sense of confidence. You already know you're going to be right on the trade, so entry doesn't really matter. Oh, I was going to pay $200. It's $210 now. I'll pay the extra 5%, knowing that you're going to be correct. So, or you're in for $500. You're down a little. Your trade size is $500, like we spoke about, but you get overconfident. You said, my last 10 trades are successful. That's what happened to me on Friday. I'm going to buy in some more contracts, and then I'm going to do it a third time. And before you know it, you're over levered. And if you're in a smaller account, then you're in big trouble if you're not correct or you scare sell. Okay, rule number 4, don't be a sheep. You see everybody on Twitter, on Weeble, on moomoo, wherever it is, and whatever social media you follow, talking up a stock. It's going to the moon. You look at the chart, it's already ripping higher. Don't be a follower. Come up with your own position. Come up with your own strategy. Being a follower will get you holding the bags. Rule number 5, do your homework. And then you look at me and you're like, Matt, I'm a grown-ass man or I'm a grown-ass woman. I don't need to do my homework. Yes, everybody needs to put in the time. Research the stocks or the option plays that I'm looking into. Let's remember my YouTube video lesson, no 2 to 3 stocks or ETFs like they're your family. You know every characteristic about them. You know their day range. They generally trade 3.5 points higher to 3.5 points lower. You know their weekly range. You know what happens on good news or bad news, so you know how the stock's going to react. Okay, rule number 6. You must have a trading plan or trading strategy. not having a trading plan or strategy, just having FOMO, or just jumping in an option play because you think the stock or the ETF is going up or down from where it currently is a huge, huge mistake. You have to know where you're entering, when you're going to add to that position if it's one of those plays that you might need to average down and you have enough time, or you need to know where your stop loss is and why, because if it breaks past a certain level going down, you could be in big trouble, so you have the stop loss in place to protect yourself on the downside. Similarly, you need to know your exit strategy. You need to know what kind of return you're looking for. Are you looking for 30%? It's a quick scalp. Are you looking for 90%? It's still a quick scalp. Are you looking for a few 100% and your play goes out a few weeks and you're expecting the stock to go down or to continuously go higher? Okay, rule number 7, inexperience. You don't have that much experience trading. You see all these people making money playing options. That's great that you want to get involved and improve your future, but you have very little experience. Well, here's what I'm suggesting. I'm going to suggest paper trading. Learn what common mistakes you make when trading. There are so many. Number 1, you enter too soon. Mistake of mine. What do I do to solve that? I underbid myself by 20%. When I'm ready to buy an option and it's $200 a contract and I'm ready to hit that buy button, I say to myself, wait, Matt, you're usually down 20% to start any given trade. So rather than paying $200, pay that $160. So that's part of what I do. Then I know what I do. I average down too soon. If I'm not using a stop loss and it's a longer play, when I'm down 10%, I buy a second contract. No, wait, Matt. Wait till you're down 20, 30, 40%. Have a better strategy. Buy 2 or 3 contracts at that point, taking down your average cost on the contract, knowing that you have enough time. What if you're in a short-term play? Well, then you're using a stop loss. So if you're an inexperienced trader, I would even suggest moomoo or Robinhood. I would plot your points. I would add options to your watch list. I would take down your watch list. I saw a friend over the weekend, 140 stocks on their watch list. Take it down to 5. You want to be a successful trader? Follow 5 stocks, maybe even less. Know everything about them. Your friend that has 140 stocks that's telling you every time something happens, oh, Roku made an offering. Oh, Disney's doing a new line of, VR games. Who knows what it is? He knows everything about everything. However, is he or she a successful trader? If you focus on one play, one stock, one ETF, and learn everything about them, that's the best suggestion I can give you. It's going to make you a better trader. It's going to make you understand the ranges better, understand your entries better, your exits better, and have a more complete strategy. Now, if you like this video, stay for the next one. I've got tons of tips and lessons to help you improve your trading strategy.